Elf on a flippin' flapjack and shelf. Oh my gosh, okay? They just reported earnings after the bell. Obviously, all the news is around NVIDIA, so a lot of people gloss over the Elf numbers, didn't even know Elf reported after the earnings, okay? Well, Elf's up double-digit percentage after hours, and I wouldn't be surprised if this stock's over $100+ quickly here, as in potentially even tomorrow. We'll see what happens here, okay? So here's what happened with Elf. Analysts were expecting 20 cents of EPS for this current quarter and about 48% revenue growth. Now, first off, who's growing revenue 48%? No one's growing revenue 48% in this past quarter. I mean, I can't, no one's growing those sorts of numbers. That's ridiculous, okay? They just came in and they absolutely, positively obliterated. I mean, absolutely obliterated those numbers in such a shocking manner that throw out any forward P metrics you have for the stock, any forward price to sales metrics, because they're completely irrelevant now at this point in time, folks. Look at this. Net sales increased 78% on a year-over-year basis. 78%. Gross margin increased 470 basis points to 69%. Remember, Elf is not a SaaS business, okay? They sell physical products, and their gross margins are 69%. It is insane, okay? In terms of EPS, they easily beat. 29 cents came in on a GAAP basis. They reported 42 cents on a non-GAAP basis, or adjusted diluted earnings per share, 42 cents here. I mean, this is a stock you get out of the flipping flapjack and way, folks. You get out of the way in regards to this one because it's a freight train coming through. Now, that's just a start. Here's the deal. The guidance, as far as what analysts were expecting for next year, for fiscal year 2024, right, which is they're about to go into their fiscal year 2024, analysts were expecting $637 million, okay? Even on the high side was $680. What if I told you that Elf smashed the guidance number that analysts were expecting and smashed even the most bullish analysts out there? Here's what they came in with. The company's expecting $705 to $720 million for fiscal year 2024 net sales. That is incredible. And here's the thing. They just sandbagged, in my opinion, they sandbagged net income. This is where actually you'll see tremendous beats, in my opinion, come quarter after quarter after quarter throughout the year, which will give its next leg up in regards to this whole situation with Elf. So when I look at Elf on a shelf, I mean, the execution does not get better than this. It does not get better than this. It is absolutely incredible. They're arguably the most well-run company in the world. And that's saying a lot because this is just a small company. But who else is putting up these sorts of numbers? Who else just put up 78% revenue growth on a year-over-year basis and came in with a guide that just smashed even the highest end analysts, right? I mean, not even NVIDIA is putting up these sorts of numbers. This is on a whole other level, man. Incredible. I'm the happiest shareholder of Elf you could possibly imagine, okay? So Snowflake, after hours, down 11.6%. Now, Snowflake's always got thrown in the category of Palantir. I don't know why. It's always been that way for whatever reason, okay? Stock's down big after hours in regards to Snowflake. So, first off, I think people are rooting for Snowflake to go down because they just want to say this. Snowflake shares melt. I mean, it's just so perfect, right? You really want the stock to go down just so you can say something corny like that. Like, oh, did you see Snowflake shares are melting after hours? Like, come on, man. Okay. Here's the problem. Snowflake had a massive valuation going into, obviously, this earnings, right? They've had a massive valuation for a while, even though the stock's come down quite a bit. Snowflake sees product revenue of $620 to $625 million for the July quarter. The street consensus, meaning average, was at about $649 million. So the company, you can't do this. You can't have a high valuation and come in and miss what analysts were expecting. And that's a pretty decent sized miss, too. You can't do that, man. And then in terms of the full year, Snowflake sees product revenue of $2.6 billion. That's up 34% from the previous guidance target of $2.7 billion. You know, for a company like Snowflake with that valuation, if you're starting to talk about 30% growth, it's not exciting for investors. You know, this is a company that very shortly ago was growing 100% plus a quarter. And now you're coming in and talking about 30% growth. You're missing your targets. That's bad, okay? And, you know, I've heard some folks talk about this. I was even looking at comments under the Barron's article, and there was even a gentleman who has mentioned this. And basically, from what it looks like a lot of Snowflake's cost actually goes into the pockets of AWS and Azure from what I see, and AWS being one of the big beneficiaries of that. So, if you want to play Snowflake's success over time, you actually don't have to play Snowflake. If you want, you could just buy Amazon stock. And then you get Amazon e-commerce play, you get the cloud business, which benefits from a lot of these companies that build their own businesses on the backs of AWS. I mean, it's just an easy way to do it. I choose my ways. People can choose their ways, okay? But me, AWS, okay? Now, next up, if you're talking about you're fundamentally changing revenue numbers for companies, you're going to have to fundamentally change earnings per share numbers, okay? If you're talking about now NVIDIA is going to be growing 60, maybe 80% this year, right? Versus obviously they weren't even expecting close to that growth. Then ultimately, this company, you got to understand, like for every dollar a company like NVIDIA is going to bring in for their top line, is going to be, dramatically more for the bottom line, right? And so in regards to NVIDIA, 459 was expectation for fiscal year 2024. I mean, I think $8 to $10 is very realistic for NVIDIA now for fiscal year 2024, which is what they're in right now. $8 to $10 is very realistic in my opinion. If they're doing $8 to $10 this year, then you can easily throw $12 to $15 EPS next year without question, right? Because next year you would expect the first quarter, second quarter to be far stronger than this year was, right? Because it's not like the AI demand is just one off, and like these are multi-year cycles, and usually there's a ramp build that, you sometimes don't peak for 3, 5, 7 years in terms of that, right? So right now, NVIDIA is likely trading at a 35 to 50 real forward PE. Now, for a company that is, let's say, going to grow revenues 60% plus, is that high? The answer to that is, I hope you know it, absolutely not. That's not even remotely high. Like if you're talking about a company that's going to be growing 60% plus revenues, I mean, a 30 to 50 is laughable. That actually means the stock was significantly, epically undervalued. And that's the craziest part of this is people have gone from going into these earnings thinking this is a massively overvalued stock. And now you're walking away, and if you know anything about valuing companies, you're walking away and you're saying, actually, even after this crazy after-hours move, I think it's undervalued. And you don't get this sort of move in this sort of market cap without a lot of Wall Streeters realizing, crap, man, we messed up here. This is actually really undervalued. And this actually has huge opportunity over the next several years here of expansion. Wait to see the actual forward P. It's not even close to what the analysts have out there. NVIDIA is going to blow those numbers out of the water. It's not even it's hard to even comprehend. I mean, NVIDIA could double up, triple up, quadruple up the EPS estimates that people are expecting when you have this shocking of revenue beats coming in, okay? Now, I've told people this time and time again, and if you watch the channel, you've heard me talk about this for months because I've seen the obsession, absolute obsession with people wanting to short NVIDIA stock and buy put options, and specifically from the retail side. And even one of my favorite YouTubers on the platform, who I have a great deal of respect for, he's always hell-bent on speaking bad about NVIDIA, right? And I love that guy, but it's just like, he's got this one wrong, right? And we get stuff wrong sometimes. And I told you guys time and time again, don't mess. It's not worth it to mess with this one. Get out of the way. You don't have to buy the stock, but get out of the flip and flap checking way. Once I found out in February, the company was selling these AI chips for anywhere between $10,000 and $30,000. That was it. It was like, get out of this stock's way, okay? Don't mess around with shorting it. Don't mess around with put options. You got to understand, companies are ordering hundreds, thousands, and tens of thousands of these chips. Run the math. Run the numbers on if they sell 10,000 chips at $20,000 average selling price and tell me what that adds up to, okay? And the thing is with these AI chips, this is going to be a multi-year cycle. So it's not like this is just a one-off. It's like these orders are going to roll in for years and years to go in the future, right? Now, NVIDIA obviously has a big advantage here in the AI market. In the short term, at least. AMD is on their tail. AMD will be coming into this market in a much more substantial way and could potentially even take some market share from NVIDIA. And so AMD is benefiting from this move in regards to NVIDIA as well, right? Stock's up about 6% after hours. I've seen it up as much as even 7 or 8% after hours. We'll see where AMD is, but it should be a very, very good day for AMD and for NVIDIA. So the bottom line is if you have been shorting the stock, buying put options on the stock, it's been blind belief that hoping it's going to go down or something like that. Because when you got to understand, when you are getting these sorts of prices for these chips and you have the demand that's coming for, you get out of the way of that, man. You get out of the flip and flop. You don't have to buy the stock. Just don't mess with it, man. It's not worth it.